Hi, everybody. My name is Lindsay Haas, and I did my literary review on Accounting Standard Codification 842, which most of you might know is leasing standards. So, in my review, I handled transparency and comparability, which are two of FASB's goals with ASC 842. I look at managerial decision making and financial indicators and how they were affected by the new standard. Then I take a brief look at highly affected industries, specifically the airline industry, and kind of everything that they faced given the new standards. So, as I mentioned, in a press release in 2016, FASB released the the new accounting standard, ASC 842. So it was a major shift in the recognition of leasing activity, most specifically operating leases. Prior to ASC 842, operating leases were treated on a straight line expense, and then the liability for the lease and the details of the asset were disclosed in the footnotes. ASC made it so that the right of use asset and the liability had to be recognized on the balance sheet for any long-term leases, which is any lease longer than 12 months. Short-term leases up to 12 months are still under ASC 842 recognized as straight line expense and no asset recognition. So part of the comparability aspect of ASC 842 is that FASB worked with the International Accounting Standards Board. They were creating IFRS 16. And so they were kind of working at the same time to again increase that consistency with how leases were recognized. So the articles that I reviewed, as far as the goals for FASB's transparency and comparability, focused on whether those goals were achieved. So one article discussed the footnote disclosures, which ASC 842 does not eliminate, just moves the liability and asset to the balance sheet, but the footnotes disclosures are still required. And they found that the disclosures became less readable and more convoluted under ASC 842. That has a lot to do with the specifics that have to be included in the footnote, which are the terms of the contract, incremental borrowing rate, any details used to calculate the right of use asset and liability. As well as there are instances now under the new standard where there are leasing components within non-lease contracts. And again, those all have to be disclosed. We talked about how FASB and the International Accounting Standards Board work together. And while they were working simultaneously on the new leasing standard, they kind of separated in their goals. So while ASC 842 has short-term and long-term leases. Long-term are split into operating leases and finance leases, whereas IFRS 16 only took the approach to short-term and long-term leases, no categorization in that long-term, which most of the authors in the articles found that that does decrease the comparability and whether or not that fully was recognized as one of their goals. So I looked at managerial decision making, and the three kind of subcategories that I focused on were evaluating lease contracts, increasing capital acquisitions, and practical expedience package of three. So for the evaluating lease contracts, a lot of what the decision making was around future leases, which would be whether or not to do short-term leases or shorter-term long leases, meaning while they might be over 12 months, keeping them under, because with the calculations for the right of use asset and the liability, the longer the terms, the larger those asset and liability were, because of the present value of the future payments and how that was calculated and amortized over the length of the lease. There was a lot of mention of the off-sheet incentive that leasing allowed prior to ASC 842, and just looking at whether or not using leases as a future option made sense, or if purchasing was a better position for the company. And then for existing leases, there were practical expedients, which were allowances that FASB provided. And the issue is there's 3 of them, and you have to do all 3 or none of them, and kind of taking that time to decide what the best position is and how to, structure those existing leases under the new terms. For the financial indicators, this was kind of the topic that was the most convoluted, and I didn't get a real clear answer. So there were some articles that mentioned negative effects, decreased market return. One article stated that some of the higher companies within the leasing activity saw a 3.83% negative return during an 11-day window after ASC 842. Others mentioned kind of agents increasing their default likelihood. However, counter to that, there was a lot of talk of income statement benefits, decreasing of payments, kind of because you're amortizing those lease payments. And in an article that talked about tax obligation and government revenue, it showed no increase in the tax liability or decrease in tax revenue to the government, indicating again neither a good nor bad effect from this standard. Lastly, I looked at highly affected industries, specifically focusing on my research on the airline industry. However, there were retail, restaurants, transportation, any industry that has a high occurrence of operating leases was considered a highly affected industry. Most of the difference is the administrative burden. So that is, kind of going and assessing existing leases, again, whether or not you want to take the practical expedients, just figuring out the right of use asset and the liability in general. So they were more burdened by both the managerial decision making and what strategically made sense moving forward, and the administrative burden of doing that. Also, the financial metrics for them were clearly increased effect for those. In conclusion, you can see that there are a lot of changes that ASC 842 brought to the accounting industry and to many companies. Again, whether that's managerial decision-making, the financial indicators, and more so for the highly affected industries. Thanks.